Hi, I'm Ankit from ValueNest Buyers Agency, and I specialize in research-led property investment strategies. I help property investors make confident, data-driven decisions by focusing on numbers and fundamentals and not headlines. In this video, I want to take a deep dive into Greater Darwin and explain why the data suggests it is emerging as one of Australia's most compelling property markets heading into 2026. Now, this isn't based on headlines or speculation. It's based on sales activity, supply and demand data, yields and long-term economic investments. So let's walk through the numbers and see what the charts are really telling us. So first of all, let's see what is the economic foundation of Greater Darwin. Let's start with the fundamentals. Greater Darwin's gross regional product reached approximately $21.6 billion, supported by a strong and diversified economy. Employment here is a major strength. Unemployment rates are extremely low, around 2.9% in the city of Darwin, 2.5% in Litchfield and 3.6% in Palmerston. When unemployment is this low, housing demand is rarely the issue. Instead, pressure builds on supply, which is exactly what we are seeing right now. Now let's look at the buyer demand, because this is where Darwin really stands out. In the most recent quarter, total property sales across Greater Darwin were up by 122%. That means sales activity more than doubled compared to the same time last year. Units here are leading the surge. Quarterly unit sales increased by 135%. And units now account for 36% of all transactions, which is up from 31% just 3 quarters earlier. This shift tells us buyers are responding to affordability and yield, not speculation. When both houses and units see rising demands together, it usually signals a market-wide expansion phase. Now let's talk about price growth, because this growth is not isolated. Over the past 12 months, areas like Zuccoli have seen a very good house price growth, and they're up by 36%. Berrima is up by 27%. Malden has risen by 22%. Grey is up by 17%. And Wanguri has increased by about 15%. What strengthens these numbers is transaction volumes. Now, for example, Zuccoli recorded over 270 house sales, Rosebery recorded around 159 sales, Durek saw roughly 184 sales. So this high turnover tells us this growth is supported by broad buyer participation. It is not just a handful of sales we are talking about. That makes the data far more reliable. Now let's talk about the standout feature of Darwin, which is the rental performance, and this is where Darwin is very different from many other markets. House rental yields are reaching 7.9% in Berrima, 6.5% in Muirhead and 6.4% in Humpty Doo. Units are even stronger. In many suburbs, units are returning between 7 and 7.9%, including areas like Darwin City, Driver and Nightcliff. These yields provide a significant driver against interest rates and make Darwin particularly attractive for investors focused on cash flow and serviceability. Strong yields also reduce holding risk, which supports continued buyer confidence. Let's see about the future supply and what the pipeline looks like, because that is a talking point about Darwin, and it is also a critical piece of this puzzle. Across the entire Greater Darwin, 67% of suburbs have now shown positive market rankings, and that rises to 79% for unit markets. This tells us the strength is broad-based, not concentrated in a single pocket. At the same time, new housing supply remains limited, meaning demand is running ahead of construction. That imbalance is one of the key reasons prices have moved so strongly and why pressure is likely to persist in coming years as well. Now finally, let's look at the long-term drivers, because Darwin's story doesn't end with just the housing data. There is billions of dollars of committed infrastructure and investment underway. Here are a few examples. First one is $870 million for the Darwin ship lift, $5.3 billion for the Barossa offshore gas project, $30 billion for the Australia-Asia Power Link, and $1 billion for the North Crest Master Plan community. There is more than $6 billion in defense projects which is scheduled before 2028. On top of that, Darwin is emerging as Australia's digital gateway to Asia with multiple international subsea cables, new data centers and further expansion which is already planned. Now this is already planned. These projects support jobs, population growth and long-term housing demand. Now when you step back and look at all the data together, the picture is very clear about Darwin. Sales activity has more than doubled. Prices have risen very sharply across multiple suburbs, not just one or two. Rental yields remain strong amongst the whole country. Long-term investment is reshaping the local economy. So this is not a short-term rebound. It's a market that is structurally strengthening and positioning itself for continued momentum into 2026 and beyond. So if you would like to understand how Greater Darwin might fit into your broader property strategy, how it can help you shape up your portfolio, feel free to reach out and start the conversation. Thank you for watching the video. I'll see you in the next one.